Hey guys, this is your host Nitin Binhani, and a very warm welcome to my startup podcast channel Jazair Audio, where we share real stories with real learnings.
Today, we'll delve into the dramatic turnaround of OYO Rooms, a once troubled hospitality startup that has defied odds to achieve profitability and regain its foothold in the global market. OYO's journey is as much about resilience as it is about leadership and sustainable expansion. By the end of this episode, you'll gain valuable insights into the key strategies that propelled OYO's recovery. So, how did this unicorn startup go from 2,000 crores rupees to profitability in just 1 year? Let's dive in. Part 1. The Rise of OYO. Founded in 2013 by Ritesh Agarwal, OYO Rooms started as a bold attempt to standardize budget accommodation in India. Its promise: affordable, reliable, and accessible stays for travelers. Over the years, OYO expanded aggressively, entering markets across Asia, Europe, and the Americas. In October 2019, OYO raised Series F funding of $1.5 billion, led by SoftBank Group, Lightspeed Venture Partners, and Sequoia India. OYO has raised a total funding of $3.41 billion over 19 rounds. At its peak, the company was valued at $9.6 billion. Part 2. The Key Challenges. This rapid growth came with pitfalls. By 2019, operational inefficiencies, customer dissatisfaction, and a mounting cash burn rate began to unravel its success. The hospitality industry took a big hit from the COVID-19 pandemic, and OYO was no exception. The pandemic in 2020 dealt a severe blow to OYO's already strained finances, with losses surging and revenue plummeting. With travel on hold and people staying home, OYO's revenue dropped by 70%, going from 13,000 crore rupees to just 4,000 crore rupees in 2021. OYO's struggle was emblematic of what happens when startups prioritize aggressive expansion over sustainability. The customer ratings had plummeted to 1 star according to Booking.com until 2022. Critics questioned its business model, terming it as an overhyped unicorn. Part 3. The turnaround begins. OYO's turnaround started taking shape in 2022 and culminated in a remarkable transformation by 2024. Here are the key strategies that led to its revival. Market consolidation. Streamlining operations in key markets and reducing presence in less profitable regions. By the end of FY23, OYO had 12,938 hotels, down from 18,037 in FY22. Cost optimization. Employee costs, once a major expense, were halved between FY22 and FY24. OYO also renegotiated lease agreements, cut promotional spending, and shifted to performance-based marketing campaigns, which contributed to a leaner cost structure. Streamlining operations. OYO revamped its focus by consolidating operations in profitable regions, notably Southeast Asia, Europe, and the US. It introduced higher-end OYO brands to cater to a more premium clientele while rolling back low-performing and poor customer experience hotels. This strategic pruning helped reduce overhead costs significantly. Prioritizing customer experience. OYO shifted its focus from just giving value to offering a great experience. OYO introduced new programs like Spotless Stays and Super OYO that led to a 35% boost in customer satisfaction in a test run across 250-plus hotels. Its ChatGPT-enabled check-in solution is expected to cut front desk operational costs by 60% for its UK hotels. Pivot to revenue sharing. OYO also switched from a fixed-fee model to a revenue-sharing agreement with hotels, thereby allowing for better cost management and improved revenue. Market expansion. Beyond accommodation, OYO also expanded its offerings to include long-term rentals and subscription services, creating more stable revenue streams. A sharp focus on spiritual and sports tourism, as well as premium hotel bookings, helped OYO turn things around and reach profitability, as per multiple sources. Religious tourism that only requires basic facilities to stay for 3 to 5 days has been a key driver of growth for OYO, especially in 2024, claimed a hospitality sector analyst. Its acquisition of Motel 6's parent company, G6 Hospitality, in 2024 for $525 million further bolstered its U.S. footprint and diversified its portfolio. Tech-driven efficiency. OYO invested in technology to improve customer experience, such as enhancing its booking platform and deploying AI for dynamic pricing and inventory management. These efforts have collectively resulted in higher customer retention and optimized resource utilization. Part 3. Financial performance and milestones. The results of these measures were evident in OYO's financial performance. In FY24, the company reported its first ever annual net profit of $12 million. This marked a sharp turnaround from its 1,287 crore loss in FY23. Additionally, the revenue for FY24 stood at $640 million, albeit slightly lower than the FY23 due to market exits, but far more efficient in generating profit, ultimately reporting a net profit of 229.5 crore in FY24 after several years of losses. The adjusted EBITDA turned positive at 175 crore, $21 million in Q1 FY24. In Aug 24, OYO raised a $175 million round primarily led by Patient Capital, a Singapore-based entity. However, the valuation sank to $2.4 billion, a steep 75% decline. Subsequently, Ritesh Agarwal himself invested $100 million in the company through his wholly owned entity. This highlighted his own conviction in building a sustainable, profitable OYO for decades to come. Recently, OYO raised a $825 million term loan arranged by Deutsche Bank. The new debt will be used to retire the existing loan of $446 million that was to be repaid in 2026, thereby saving interest finance costs by $30 million. Part 4. Key lessons from OYO's turnaround. The success of OYO's recovery offers several takeaways for entrepreneurs. Focus on core strengths. By prioritizing its profitable markets and streamlining operations, OYO created a sustainable growth model. Adaptability. Navigating economic challenges requires agility, as shown by OYO's shift in strategy during the pandemic. Leadership's role. Ritesh Agarwal's vision, coupled with a hands-on approach to addressing inefficiencies, was instrumental in the turnaround. Conclusion. OYO's resurgence is a testament to the fact that a startup's trajectory is rarely linear. What sets OYO apart is its ability to confront adversity head-on and emerge stronger, albeit with a humbler valuation and realistic growth expectations. As OYO eyes an IPO and seeks to scale further globally, its story remains one of the most compelling case studies in the startup world. Hopefully, the lessons from OYO might inspire Bhavish Agarwal, the founder and CEO of Ola Electric, to the next big turnaround story. Folks, that's it for today. Thanks for tuning in. Please like, comment, and subscribe to the channel. Join us next time as we continue exploring the dynamic world of startups and the valuable lessons from their journeys.